Hey guys, it's zo.azubuike with Ed's Home Finance here. Today we're going to talk about how you can tap into your home equity. Okay, there's three programs I want to go over, and these are all ways that you can tap into your home equity. And depending on what your goals and what you're trying to achieve, is what's going to help determine which program and which option would work best for you. Okay, so let's jump right into it. All right, the first way is with a cash out refinance. Okay, a cash out refinance basically is going to replace your current mortgage. You're going to pay it off with a new loan. It's basically a refinance. But the reason you're able to cash out is because you've got enough equity to do so. All right, so you're going up to 80% of the value of your home. That's the max cash out refinance amount. It's going to be 80% of the value of your home, and that's going to be confirmed by an appraisal. All right, so that appraisal tells you the value. The lender's going to go off of that, and you max at 80% of that. And the difference that you get after you pay off your mortgage with that new loan and after you cover closing costs is the amount of cash that you're able to pocket in the form of a wire or a cashier's check from the title company at closing. Okay, so this program is going to give you a new rate. It's going to give you a new term, whether that's a 15-year, 20-year, 30-year term. We also have options to do flex terms, which is basically 27-year, 28-year, 24-year. If you wanted to make sure that you're not adding more years to the life of your loan, we can definitely customize it with that. All right. So, but that's ultimately what a cash out refinance does. So it's going to replace your current mortgage. You're going to get a new term and a new rate. So the second option we're going to talk about is the HELOC. All right. HELOC is a lot of folks are familiar with HELOCs. HELOC it stands for Home Equity Line of Credit, and the HELOC allows for you to have. Basically, you don't touch your current mortgage, all right? You leave your current mortgage alone. You add the HELOC as a second lien on your property, all right? So this is basically going to give you access to your equity in the form of a line of credit. Think of it like a credit card to your equity, okay? You're going to have a separate account. Whatever you pull out is what you're going to start paying. This program is an interest-only variable product, meaning the rate is going to be adjustable potentially per month, depending on the exact terms that you get from the lender. There's different ways of doing it, but most of the time it's variable, and you're going to have access to your HELOC for 10 years. And then if you have a balance after 10 years, most programs will turn into a 20-year fixed, or most people at that point can just refinance and start the 10-year period over again for their HELOC. Okay, so these rates are typically going to be higher than your first mortgage rate because they're a second lien. But the idea with these is you want to think of it as not long-term money, right? You want to have an idea and a plan to pay it off because it's interest only. And a lot of folks will forget that you have to pay principal on top of the interest minimum payment that the bank is asking for. So it's just something to keep in mind. And depending on what you're looking to do with it, it could be an ideal program for you. Now, the third option is actually growing to be one of my favorite options, and a lot of people aren't aware of this. Okay, so this is called an all-in-one HELOC program. All right, all-in-one HELOC program, and this is a program that is really, really unique. So in order to kind of make sense of it, I'm going to share my screen here in a little bit, but think of this program as it's a HELOC. It's a home equity line of credit, but it's going to replace your first mortgage. Okay, it's going to replace your current mortgage as the first lien, so you get a slightly better rate than what it would be as a second lien. But I'm going to explain to you what the all-in-one element is here when I share my screen with you. So let's switch over to my screen here, and I'm going to show you exactly how this works. Okay, guys, we're going to give you guys an example of how this program works. So this is ultimately a HELOC calculator. Okay, I'm going to break this down for you as I go. But this program, this all-in-one program, is a really unique product if you're wanting to ultimately pay off your loan in a faster time frame than what a normal mortgage would. Let's say your goal is 60 months, like that's 5 years, right? You're like, how in the world are you going to pay off your mortgage in 5 years? Most people think that in order to pay off your mortgage fast, you just got to dump a bunch of extra principal payments. Yes, and you're right. That's what you'd have to do. But here's the deal. This program allows for you to pay off your mortgage fast without having to add more principal. And I'm going to show you how. All right. So let's say that you have a $250,000 balance that the new HELOC is going to replace. All right. So And let's say you've got a home that's worth 500,000, your balance is 250, so you've got extra space and room in this HELOC if you wanted to go higher than 250. But if you're just wanting to use this program to pay it off as fast as possible, this is basically the illustration I'm going to show you. So let's say rates right now for this is about 9.25, and this is middle of March 2024. Just keep in mind rates do adjust with time. So this is going to be a variable rate, 9.25, and we've got 60 months as the goal. Let's say you make about 10,000 a month, all household income, you and your spouse, and let's say your monthly expenses is 5,000 a month. Okay, check this out. I'm going to scroll down here, and you can see this chart. This is showing you your balance, 250,000 at the start, month 0, right? So this is the balance amount in the thousands, and then on the bottom here, or this bottom line here, is the total number of months. So check this out. Doing this every month brings your balance down, not quite reaching the 60-month mark goal, but not too far off, right? Paying this thing off right around month number 64, all right? So 4 months, 5 years and 4 months. That's pretty incredible, right? Let me show you how this is happening. Ultimately, what this program is again, it's called all-in-one. So it gives you a sweep account in association with your HELOC account. And this sweep account is basically a checking account. So every time you receive your income, it's going into the sweep account. The sweep account takes that exact amount of money that you've deposited and puts it right into your HELOC. It brings your principal down. Immediately you put it in, and it turns that checking account amount into 0, puts the money into your HELOC, okay? Now, whenever you have expenses, you run your whole household out of this sweep account, okay? So anytime you have expenses, you withdraw it, 5,000 a month, it comes out of that HELOC, okay? The reason you're able to do this is because the HELOC is accessible revolving door to your equity. So you can pull out money, put money in, pull out money, put money in. And this interest rate right here, 9.25, is a per diem interest rate, meaning it's going to calculate the amount of interest you owe per day, like what your balance is per day. It adjusts the amount of interest you actually pay on. So because you're accumulating your income and putting it towards your principal that aggressively, basically this is like your total payment, right? And it's principal. The automatic interest only portion that's due every month is going to come out from your expenses. But because you're putting so much more principal, imagine doing that on a regular mortgage, right? You couldn't do that because you won't be able to have that money back. Well, with a HELOC, you get access to this money back. So this is an incredible program to ultimately utilize to pay off your mortgage fast. Now, the key here is you want to make sure that you're putting more money in than what's going out, right? Because watch this. If you're not putting more money in than what's going out, let's say you're only putting 2,500 in, 5,000 coming out, look at this. It doesn't really work that well, right? So this is one of those things where you have to have good stewardship, overseeing the account and overseeing how this works. But ultimately, if you're putting more than what's going in, you're going to pay off your mortgage super fast. And I mean, this is not even to mention all the different things you can do once you have a zero balance on this mortgage. A lot of folks that we're having this conversation with, they're thinking about in real estate investing and putting this money to work after it's at a zero balance, right? Imagine having access to your equity. Now you go buy a rental property for cash and you come back, do this again, pay it off in 5 years or 4 years, right? Because now you got more money coming in because of the rental income, right? You can look into the BRRRR strategy. This is one of my wife and I's favorite rental portfolio building strategies. This is one of the things that we do, the buy, rehab, rent, refinance, repeat. You can do that with this money, with this HELOC, utilizing it for additional ways. So this is just like I said, guys, this is a lot of different things you can do with this. It can help you grow your wealth and grow your rental portfolio. There's other things that you can consider doing with it. But even if you're just wanting to pay off your mortgage super fast, you should consider this as well, as long as you know that you can have more money coming in than going out. So I hope that all made sense. Let me know if you'd like to set up a time to do a Zoom call. We can look at exactly your specific scenario and see if this would make sense for you. And I could also send you an email with this specific PDF specific to your scenario. So hopefully you guys found this video helpful. If you liked it, go ahead and smash that like button. Help me get some exposure to my channel, and give me a subscribe if you haven't subscribed already. And hopefully I'll catch you at the next video. Take care and God bless.